Fed officials see 0.5% GDP growth at the end of this year, at the end of 22. I mean, I'm looking at incredibly slow growth. I'm not hearing that from Ed Bastian at Delta. I'm not hearing that from Scott Kirby at United Airlines. I'm not hearing that from economists tuned in to not a booming, but certainly a healthy GDP in America. Does the Fed have the GDP slowdown right?
I think, Tom, if anything, 0.5% is probably overly optimistic. When you look at how restrictive monetary policy would be based upon what they just told us, 5.1% funds rate at the end of next year, when we have an inflation rate at 3.1, that's pretty restrictive. And when you start to look at what it's going to take to bring inflation down, our in-house estimate is that we would probably see about a 2% rise in unemployment over a 2-year horizon. So the numbers don't all add up.
When does that happen? The when of this is, I think, maybe this is the when Fed meeting, Scott. We're trying to figure out the when of it all, aren't we?
Right. You're absolutely right, Tom. I mean, the question is, I said yesterday is, how far will the Fed go? How long will they stay there? When will the recession come? When will they reduce rates? That's the whole narrative here, I think. And, the message the Fed sent today, I think, is the message that the market expected them to say. That is, we knew they had to be very hawkish. And the reason they had to be hawkish is that, financial conditions have loosened pretty dramatically over the last 6 weeks. The stock market's up substantially. Rates are down meaningfully. And so, the Fed, I think, felt that it needs to lean into that because it doesn't want, the economy to pick up momentum again and, prolong the inflation problem.